Welcome to CGFX everyone. Today I'm going to be taking trade on gold here. So I just want to just analyze it before markets open so that you see what I'm expecting from this. But before I analyze it for you, make sure you click and subscribe to my channel. Alright, let's go. So as you can see, I'm on gold in my trading view here. So remember what I told you guys. You go to your 4 hour first of all to check your market direction. And you can see the market direction. It is what? It is bearish. The market direction is bearish. So we are actually the market direction is currently bearish for this one here. This minus this substructure here. But as you can see here, from this part here, I'm coming. Let me draw it for you. No. That's not it. That's tools I want to take. As you can see from here, this is our swing low and this is our swing high. So as you can see, actually the market are not breaking either of these. So I can say that we are still in the down trade because this is now to come and retest this breaker block that is either this one or this one here before moving up. So what am I doing here? I'm counter trading this market. You understand? I want to counter trade it. So I went back to my 1 hour time frame. Since I used 4 hours to check the market direction, I don't hesitate to go back to the 1 hour time frame to do my analysis. So once I went to the 1 hour time frame, I currently check for my for where liquidity zones So I saw one here and I can see my fair value gap, and I marked my order block here, my H1 order block. So this was the order block that was valid. So that's one I took. As you can see, price came to this order block here and retest it. So this one is already mitigated already. So I could not use it. If I place it here, you can see price touched it here. So if I come here and I draw my order block from here and I covered it here, you can see price mitigated it. So I can't use this one again, so because it has been mitigated. So I started from the upper part here. From this upper part, can you see from this upper part? So because in forex we start analyzing from our left hand side to our right hand side, so that's what I did here. So I started and I was looking for my what they call it here. So I found out that this only the suitable one here that is valid. So what I do, I mark my FVG, that's my fair value gap, and I mark my order block. So as I mark for my order block, what I do next, I wait for price patiently. That's my strategy. If you're not patient, you can't be able to use this my strategy. So I wait for price to patiently tap my order block. Once price tap my order block, what do I expect? I go to my 15 minutes time frame. That's where top down analysis come in place. I go down to my 15 minutes time frame and I wait for a market structure shift. From here, it tap my order block. It come down here. Let me assume that it do something like this here. Can you see? Created a market structure shift. It retraced it came back here. Then once it comes to this part here, then I'll enter that, reach this other block, or I come back to this other part here and I'll do my take profit. But this is the thing that I want you guys to know, to take home with. This is the key stuff I want you guys to take home with. First of all, how do we check our this? First of all, we check for our change of our sweep of liquidity. Can you see it? Change of structure here, because this is our swing low here. For if this thing come down here, can you see it? It went up, it retraced, it broke it. So you can come back here and call this as our this thing. So once price break this part here, let me come back here, please. So once price breaks this part here, I know that actually the lower time frame has aligned with our 1 hour time frame. Do you understand? Because currently market is moving downwards. So since it has aligned with our 1 hour time frame, that's what I'm waiting for a market structure shift. Something like this. I'm coming, please. Come up. That's how we make money on Forex. Forex is not hard. It's you guys that are making it hard. You can be able to grow a $3 account to $100 account, $500 account. You can be able to grow $10 accounts to, depending on your imagination and depending on your zeal. So let's continue. Wait for a market structure shift. MSS. So after we see our market structure shift, you can also call it as change of character. So, but I prefer calling it market structure shift. So after seeing the market structure shift, before price retrace this retracement downwards, we come immediately and do our analysis again. We come to this same part here, we look for our fair value gap that is valid. Then we mark it. Are you seeing? And also mark our fair value gap. Our fair value gap. Please take note. We'll mark our fair value gap. So in the next video, I'll show you how to mark your fair value gap. You come to this part here. Anyhow you want to do it, but just do it. Make sure it's accurate. You mark your fair value gap. Make sure you always analyze it. You mark your fair value gap, FVG. So, and make sure you always label your supply zone, or you can call it your supply zone. Yeah, supply zone. So come here and label it. This is our order block. So are you seeing? For me, I prefer to label it by time frame so that I won't confuse myself. So since this is 15 minutes, I just put my 15 minute there. I just say 15 minutes OB, that is our order block. Are you seeing? So once price taps in that place there, I will just come here and just press my short position to this part here. Can you see how I do it? This is how we make money, and it's very easy. First of all, I'll click here as my first take profit. Then here as my second take profit. Here's my second take profit. No door, it's no play. Are you seeing it? That's how we do, and that's how we roll. So once price taps this same part that is here, once price taps this my demand zone in my 1 hour time frame, a quick recap is what I do. As you can see, we're in the 1 hour time frame. I repeat again, we're on the 1 hour time frame. I quickly do my analysis on my 1 hour time frame after checking my market direction on my 4 hour or my daily time frame to check the market direction. After checking the market direction, I go to my 1 hour I mark my swing high and swing low. My market structure shifts and my BOS. You understand? Then what next? I identify my recent two swing high and my recent swing high and recent swing low. After identifying it, then I look for my either my breaker block or my what other block. So let me just do a quick recap again so that I will not bore you with all my grammar and rules. So I start again. After identifying my direction on this, I found out that there's a other block here that this thing is going to retrace to, and it's also another block here that this is eventually going to retrace to. So what I do, I quickly go to my 1 hour time frame to do my analysis. I come here, I mark my change of structure. I come back here again. I found out that these are swing low and these are swing high. So can you see it? So market have not broken any of this. So what I do, I quickly run back to this place here because this is my two recent swing high and two recent swing low. Please take note. This is my recent swing high and this is my recent swing low. Can you see it? Can you see it? Hope you can see it. Let me not bore you, let me not confuse you with all grammars. Please just understand it. Understand it. I'm trying my possible best to understand it, to break it down for you in a suitable manner, in a suitable term, anyone you want to call it. So, after identifying my recent swing high and the recent swing low, what else did I do? I mark my demand, my supply zone, sorry, my order block. After identifying my order block and my fair value gap, as you can see, this is a liquidity sweep here. You identify your liquidity zone here. Remember, you can see liquidity on what they call it here. This is our liquidity. So I come here and just mark it. Make sure you always mark because let you not forget easily. You understand? And make your chart look so nice. So where's my, please don't mind me, this I'm using my phone here. So let me just usually just anytime I see a dollar sign means liquidity. So this is my liquidity. So I'm waiting price to sweep this liquidity. After sweeping this liquidity, it comes down also here and sweep this liquidity too. But first of all, it's going to sweep the liquidity on at the top. I mean, can you see? This is a liquidity zone. Can you see? Don't worry, I'll do my next video, do my all possible best to explain for you liquidity zone, order block, and some nice stuff. You come here, remember that we use dollar sign as liquidity. So now, after identifying these things, what else are you going to do? You mark your order block. After marking your order block, you patiently wait on the same time frame that you are analyzing your market. You're analyzing the charts. On the same time frame, patiently wait for price to tap your order block. Once price taps it, can you see it here? Let me increase the texture of the I don't know how they call it here. So the pixel, how they call it, please. If you're someone that wants to school, just tell me. Don't mind me. So you wait for price to patiently tap this zone here. After waiting for price to patiently tap this zone here, what else do? You immediately price taps this zone. You run immediately you go to your 15 minutes. That is three time frame ahead below your higher time frame, below the analysis the analysis time frame that you used. If you're using your 4 hour to analyze, you go to 1 hour to place your entry. If you're using 1 hour, you go to your 15 minutes to place your entry. You understand? But it depends on what you are looking for. Like if you're using 1 hour to analyze your market, and you usually use your 15 minutes for your entry. Once you go to your 15 minutes and you try looking for what you are looking for your market structure shift, and you didn't see what's giving you, go to your 5 minutes and what check for what is giving. Once you see what you're looking for, you place your trade in that same place, and you take depending on the risk to reward ratio that you are looking for. Yeah. So what do we do? What is this? Uh-huh. So you go to your 15 minutes immediately. Sorry, um, I just like story. So you go to your 15 minutes. After going to your 15 minutes, you do the same thing that you did in your what? In your 1 hour. You reanalyze it again. You pick your wow, wow. Market hasn't closed, oh. Yeah, market hasn't closed at all. Market hasn't closed. So what are we looking for now? From here, all these things you start analyzing. Start analyze, you tire. You analyze. So you analyze, analyze. Hmm. Now let's analyze. So this how it is. This is your swing low. You come here, you put your swing low again, and you mark your swing high. So what are you waiting for between this swing low and swing high? You're waiting for price to sweep the swing high, and also break that is change of structure. That's the market structure shift. Sweep this swing low, this swing high that is here, excuse me, and once you sweep it, that is after it has touched the demand zone. Hmm? Now, what do you wait for next? You wait for price to what? To break this other part. Are you seeing what I'm saying? Wait for price to break this other part. Once price breaks it, you now draw your demand zone, your order block. I mean, once you draw your order block, you draw your fair value gap. After marking it up, then you what? You go to your MT5 and what? And excuse me, please, this is not what I wanted. Yeah, you place your stop loss below it, and that is all. That is all. As simple as ABC. As simple as ABC. Please and please, I may not this explanation may not go well for you. That's if actually you don't know smart money and ICT concepts. So I'll try all possible best to break it down for you in the next video. Thank you very much and have a nice day.